Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, February 22nd, 2010. Coming out of the weekend, there wasn't much in terms of fundamental releases to move currency markets. The euro came under some pressure overnight as it dipped below 1.36 in New York trading, on the back of comments by German finance minister's spokesman that no decision has been made regarding aid for fiscally stressed Greece. That was a denial to media reports on a possible rescue plan that had been contemplated over the weekend. The Greek government is set to meet with representatives from the European Commission, the European Central Bank, and the IMF in order to discuss another 2.5 billion euros worth of cuts on top of what Greece has already announced. German experts said that Greece will be able to refinance its debt sometime in March. But the German Finance Ministry added that the German government has made no decisions on a package of aid for Greece, including a specific form that help may take and what the sum of that help would be. So again, continued uncertainty regarding the Greece situation pressures the euro, though in today's trading we stuck to a pretty small range, moving from 1.3650 down to 1.3570, so about 70 to 80 pips in a total from high to low. The euro-yen, meanwhile, had a bit of a steeper decline following a test of 125.20 in Sunday opening trading for the week. We fell almost 140 pips to 123.60. That moved us below our moving average. Here's a 50-period moving average using hourly charts. If we zoom this pair out, we do see we've had a bit of a labored upward sloping channel following this sharp slide on the wake of sell-off in the euro when we had some of the Greece news coming out a couple of weeks ago. Here we're showing some of the support and resistance trend lines that you could set up, and if in fact this is an upward sloping channel. We have a shorter term support line here that we tested in overnight in New York trading, and seems to have held as support. So we'll see how this technical pattern develops as the week goes. But right now it seems that the 123.60 level is holding as support. So that was also our horizontal support level on Friday's trading, as you can see there. The yen was a rather strong performer overall today, and here we're looking at the dollar yen, and we see that the dollar was weaker against the yen, giving up some of the gains it had seen during last week. These gains were actually rather steep, following our break of a downward sloping trend line. I'll show you here quickly. So once we cracked that level, we had a pretty sharp run up in favor of the greenback. Today we have cut some of those gains, as a part of this was driven by interest rate expectations of the Fed following their hike of its discount rate here. That had followed some better than expected readings on housing starts and industrial production earlier in the week that gave traders a sense that the U.S. economic recovery was gaining traction, and perhaps the Fed would be moved to increase interest rates sooner than expected. However, today we had a bit of cold water thrown onto those expectations by the San Francisco Fed Bank Chair, President Janet Yellen, who said that the U.S. economy still needs low interest rates to regain its strength. So again, that dimmed some of the expectations around the Fed's outlook and caused the greenback to give back some of its gains from the middle of last week. Now we will get more in terms of the thinking behind U.S. monetary policy when Fed Chairman Bernanke testifies before Congress in the middle of the week on monetary policy. So traders may be reluctant to push the dollar-yen higher than what we saw to end last week, around the 92 level, until we have stronger signals in terms of Fed policy. Looking at the pound-dollar pair, we see a very quiet trading session as we stuck to a narrow range. From high to low, about 80 pips, and you can see that it was a very sideways consolidation action. So traders are likely waiting for the overnight session when Bank of England Mervyn King will be in front of his parliament to discuss inflation report. So it's the inflation report hearings, and we may see a stronger move after that fundamental release. On the commodity currencies front, here we're looking at the Australian dollar, US dollar, and similar to the pound dollar pair, we see a small range and what looks pretty much like sideways consolidation trading around the 0.90 level. The pair was reluctant to move above this resistance level we had reached in the middle of last week around the 0.90 level, 0.9020 level, and though we did test that in Sunday trading, we bounced down off of that level. So a key level to watch as we go on this week, especially if we break above it. The US dollar Canadian dollar pair meanwhile probed lower in the open to this week's trading, hitting a 1-month low at 1.0370. It tested that area twice, but then the greenback managed a bit of a rally in New York trading as we had North American equities swinging between gains and losses, and the price of copper, one of Canada's exports, the price of copper was falling, so that weakened the loonie in New York trading. We did test this level here around 1.0440, and that acted as resistance as it touched our moving average and was about a 38.2% retracement of this downswing that we saw in Friday's session from 1.0530 all the way down to our low at 1.0370. Now let's take a look at some upcoming releases in the following trading session. Tonight, the Reserve Bank of New Zealand will post its inflation expectations, while overnight we get Switzerland posting a measure of consumption, Germany posts its IFO Business Climate Index, and the UK we get the inflation report hearings and a measure of mortgage approvals. The IFO Business Climate Index is a pretty important survey as it surveys 7,000 businesses from manufacturing, builders, wholesalers, and retailers, and acts as a leading indicator of economic health. Last month in January, the index registered a 95.8 reading, and expectations are for another bump higher to 96.3. Tomorrow morning at 10 a.m., the U.S. has 3 releases: the Standard & Poor's Case-Shiller 20 City House Price Index, the Conference Board Consumer Confidence Index, and the Richmond Fed Manufacturing Index. The S&P report is the premier measure for house prices in the U.S., though the data is sort of dated as it's for the December period. On the year, prices were down 5.3% in November, and they're forecast to be down 2.9% in annual terms for the December period. And consumer confidence was at 55.9 in January, and for February, the forecast is for a decline to 54.8. And that will do it for today's broadcast. For more news, videos, and analysis, please visit our site FXTimes.com. I want to thank you for watching and wish you good trading.